Welcome back to U.S. Farm Report this weekend. Garrett, Toay, as well as Rick Naysor here to talk markets. Garrett, let's start with these pollination problems, okay? We talked about it a little bit on the show last week. It really started to surface. Now we're seeing more reports of it. At last sight, I had seen it was reported in more than 10 states at this point. This seems to be a widespread issue, and I think farmers are frustrated that the market isn't taking note. Garrett, why do you think that is?
Nobody knows. I've talked to seed industry contacts. I think it's fairly widespread issue. It's not brand specific as we originally thought early on, and it's across the industry. From what I'm being told, it's the corn plant grew too quickly. In some areas it works itself out. Some areas it doesn't. Obviously that corn silk continues to grow until it's pollinated. So. I think the problem the market is not, too concerned about it or not paying attention to it is we don't know. We don't know how widespread it is. We don't know if it will even have an impact on national yield. But it's kind of one of those things is we'll trade it when we get there sort of thing.
Yeah, and Rick, this week, USDA and Thursday export sales originally put out an export sale that said China had come to the table and bought, and then actually put out a retraction saying there was a correction there. It wasn't China. I think it was South Korea. But the market got excited, really excited. And so, Rick, is that telling us that right now China is the only trade deal that matters?
I think that would be a little bit narrow-minded to think that China might be the only trade deal that matters. They matter, all right? There's no ifs, ands, or buts about it. They matter. We're getting trade deals done with Japan. We're getting trade deals done with the EU. And if you look, one of the biggest growers of corn demand year over year has actually been the European Union, up over 1.8 million tons year over year. So actually getting the EU trade deal kind of ironed out, putting a little bit more clarity into that market is going to help the corn market demand-wise going forward. China is always a sexy headline because they always seem to have unlimited pockets, unlimited demand. What we're probably going to be looking at, though, is, China's got a corn crop, too, that they have to harvest. And there's a massive South American crop that still needs to come to the market. Now there's issues going on there between domestic prices being very high, and you've got issues where, the soybean program and out of Brazil has taken up most of the loadout capacity. So my thought process is, if China does come to the market, it's probably a Q1 of 2026 issue. And therefore, a lot of traders, when they saw that headline, the ones that are attached to the cash markets were immediately pushing it aside. But I think let's not negate the fact that the volume was actually sold. So maybe it's not as important as where it went to, but the fact that those bushels actually were sold in the market in a time period where most traders thought that we would be losing business to the massive South Brazilian corn crop.
Yeah, we're not losing business. The demand story has been good for corn. We're now seeing some of these supply problems we think pop up with some of these pollination issues. Garrett, though, I go back to the fact farmers are frustrated, though, because it's not enough to move the market. Diagnose this corn problem and tell farmers what they need to know about the market right now.
The hard part is we're still in a seasonal decline. It's the sell the rumor by the fact aspect of the crop size. Is demand good? Absolutely. It's better. We're at the same price where we were this time last year. Demand is actually better today than what it was last year. If you look at our top 5 corn export destinations, our top 5 buyers, we have the second highest new crop corn commitments to those top 5 buyers, since 11-12. So we've got better export demand than we do at that point last year. So, we just have to find a point where we've got a lot of questions in front of us. What is the yield? We'll get FSA acres in August. If we get some of those answers, is there a threat of bigger acres? If we get some of those answers, then this market will bottom. And, probably price reaction, other than the fact that crude's lower than it was at this point last year, could be similar to last year because we know that this $4 level is buying a ton of demand. From a frustration standpoint, I get it. The last 2 stocks reports have shown that the farmer has been actively selling corn. It hasn't been at prices that we're happy with, but it tells me, I think, that there's some cash flow issues out there and they continue to move corn. So from an end user standpoint, which is also, when we're trying to time a bottom out here with a 1-3 carry out, The last 2, 3, 4 years, we've had, a lack for a better term, a dump of old crop corn ahead of new crop. And that's been the cheapest corn that these commercials have been able to buy. And I don't think we're going to see that this year.
Rick, real quick, you are a trader. So get us into the mind of a trader. Right now, as we're debating this yield, what is the yield that traders seem to be trading at this point? And then on the flip side, what do you want farmers to know?
Well, I think last time Garrett and I were on your show, the USDA had printed out a 181 yield and nobody believed it. They thought, we haven't seen anything above 180 ever. I'll believe it when I see it. Now, a couple months later, we've reversed, right? It's a 181 yield. We don't believe it because we actually think it's going to be a 185. Heck, some guys are 187, 190. So as every week comes through and the conditions stay adequate and the rain stay adequate and the weather stays great, these yield models continue to climb. And I think that is what the market is looking at right now. If you look at, as Garrett mentioned, you've got the price paradigm. We're trading the exact price, same price as we were last year to this day. And D's corn bottomed around 385 at the last half of August. Well, a lot of traders are looking at that, knowing that the demand is there, but assuming that the USDA is wrong on the supply side and supply actually needs to go higher. So as Garrett kind of mentioned, we need some clarity on supply before the market can ever bottom, because the market just continues every week to add a couple bushels to the yield and keep saying, well, where are we going to go with all this corn? So, the USDA printed out a 1.6 carryout, which was about a 10% stocks use ratio. In the last report, if you put a 185 yield on top of it, you're back to last year at a 14% stocks use ratio. And then you flip the page and a lot of traders are going, well, the demand's too high as well, because you have a bump, you have an increase year over year in EU corn production. You've got a massive Brazilian crop that's coming at you. So, we have to solve for the supply question first and then move forward from there. And I think we're at least a month away from getting there.
All right. Well, what is it going to take to turn soybean prices around? That's what we want to ask Rick and Garrett next.